Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TradingView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-timeframe technical analysis and order flow. Now, without wasting any more time, let's get straight in the charts to find some good trading opportunities. The pair that I want to speak about today is AUD CAD because it is very near to providing to us a good trading opportunity. So the way in which I will be performing this full analysis is first, from a technical perspective, we will then go and see what we have from an order flow perspective with the commitment of traders, which is what hedge funds are currently doing in the market. And if you're able to read the way in which their orders are shifting in the market, so the way in which the market makers are moving their orders, you do have an advantage over your competition in the market because you're able to trade alongside with the institutions. And by the end of the video, you will know how we can be looking to take a nice position on AUD CAD and what we will be looking for on this pair. Now let's start with analysis, first from a technical perspective. Now here on the monthly, what do we have? Now, first of all, we can identify a very important historical structure level at this market. In fact, this zone was acting as very strong support here, against support here, against support here, and the market broke this area to the downside. After it is broken, previous support is term resistance, so the market respected this area as resistance here and created this move to the downside. But now we consider the market has broken again back above the zone. So previous resistance, once it is broken to the upside, is turned support. And we do expect the market to go and test this support. What do we expect the market to go and test this support? We expect the market to go and test it because the market, in breaking back above this structure, has created this W formation. Now, when you see a W formation in this kind of scenario, so an impulse to the downside, correction, lower low and higher high, what you expect after this move is for the market to create a move to the downside to go and complete the pattern at the neckline, which is the previous resistance, which is now turned support. But this previous resistance, which is now turned support, in this specific case, is exactly the support that we have here. So the completion zone of this monthly W formation is exactly the historical structure level that we have at this zone. So on the monthly, we definitely expect the market to create a continuation to the downside for a complex correction after this impulse. So on the monthly, the situation that we currently have is very clear. We expect the market to create a nice move to the downside for a complex correction from this impulse to complete the W formation at the neckline, which is also the historical structure level that we currently have here on this market. Perfect. Let's go down on the weekly and see what we have from a weekly perspective. Now on the weekly, price action is quite clean as well. We have a market which has provided a nice W formation. Now again, as I just said, after a W formation, you expect the market to create a move to the downside to complete the pattern at the previous resistance, which is now support. So what we do expect from here is for the market to create a move to the downside, which actually has already started, and for the market to complete the pattern at this zone. And this zone here is also a previous support, which is now resistance, which is now turned against support. In fact, this area was previous support here. The market broke it to the downside. It was turned resistance. The market then broke it back to the upside. And at that point, this previous resistance is now support, which is also the neckline of this W formation. So the completion zone of the pattern itself. So also in the weekly, price action is very clear. Now, in general, if you have an impulse in the market, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do take our Fibonacci from the low to the high of the impulse, what we can see is that we have a first Fibonacci retracement, which is the 0.32, which is exactly at this area here, which is our first target to the downside. Because always remember, if you have an impulse in the market, you expect the market to make a retracement at least to the 0.32 of the Fibonacci taken on the impulse leg. So this is the first target to the downside after an impulse. And in this case, this move here is definitely an impulse. So we have a first target, which is the 0.32 of the Fibonacci taken on this weekly impulse, and a second downside target, which is exactly the weekly previous resistance, which is now turned support. Going down on the daily, what do we see? Now, from a daily perspective, price action is quite clean as well. Now, we had spoken about AUD CAD quite a few times in the past. I spoke about AUD CAD when the market was here. I made a full breakdown explaining all the reasons for which from here we wanted to see the move to the downside, and that is exactly what the market did. Then from here, we wanted to see first a retracement and then the continuation to the downside for the creation of a lower low. And again, that is exactly what the market did. Then we had this W formation, and after this W, I made a full breakdown of AUD CAD when the market was here, explaining all the reasons for which we wanted to see from here a move to the downside, and again, that is exactly what the market did. Then from here, when the market retraced to this supply, from this area, I made another breakdown explaining all the reasons for which from here we wanted to see this move to the downside, and again, that is exactly what the market did. Then from here, we had the creation of this M formation, and we wanted to see from here the market create a nice move to the upside, and again, that is exactly what the market did. And then from here, we wanted to see the continuation, and that is what the market did. And I made a full breakdown explaining why we wanted to see this move to the downside. Then we had this move up. From here, we wanted to see a move to the downside. However, we did acknowledge that this red candle was a strong demand zone. And in fact, the market did respect it. So we didn't capitalize on this move to the downside because we knew that we had high probability of getting a rejection. And then the market has been continuing with this move to the upside. And I will link all this previous analysis in description. So you find everything linked in description, so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. But at the moment, what do we have and how we can be looking to capitalize on the next move for AUD CAD? Now, at the moment, what we have on the daily is a market which is breaking daily structure. In fact, this area was previous daily resistance here. Again, daily resistance here. The market first broke it to the upside, but then broke back down. And at that point, this area is again daily resistance here. So what we can expect from here is for the market to give us a retracement to this area before creating the continuation to the downside and a lower low for the completion of this impulse correction and impulse pattern to the downside. So we do expect the market to create a continuation, but first we would like to see a retest of the structure for the creation of this head and shoulders. So how we will be approaching this situation with students, a situation in which we have a downside target from a monthly, weekly, and daily perspective, but we still expect a retracement before the move to the downside. Now, before I show you how we can be looking to capitalize on this move, let's first go and see what we have from a COT perspective, which is the commitment of traders. Now, on the AUD, what we can see? Now, on the AUD, we can see that overall net positions have been decreasing lately. We went from having 16.3k net positions with 60.7k longs and 44k shorts, all the way down to having minus 5.2k net positions with an added 2k shorts with the last report. Yes, we did have some longs getting added, but it was a lot of time that we didn't have any longs getting added. We just had longs getting closed, and closed, and closed, and closed. So we did have some longs getting added, but no big deal. The important thing is that net positions have clearly remained negative, and we have seen a big cut from a very positive net positioning to a negative net positioning. So the AUD is weak. And if we go and see what we have on the CAD, we can see that on the CAD with the last report, 5.3k long positions were added, bringing net positions from minus 20k to minus 16k, increasing the longs to 31.5k from an institutional perspective and bringing shorts at 48.3k. So we still have more shorts than longs, but net positions are starting to increase again, and we do have massive longs added with the last report. So we do have some strength in the CAD and weakness in the AUD. So the move to the downside is definitely possible. But the way in which we will be approaching this with the students, as usual, is reactive and not predictive. Monthly, weekly, and daily as timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. So the way in which we will be approaching this is waiting on the 4-hour time frame for the market to provide to us one of our valid entries. So during the retracement, if the market will provide us a retracement, during this retracement, what we will be doing with students is monitoring price action from a 4-hour perspective. And we will be waiting for the market to shift from a 4-hour bullish market, as it will be, to a 4-hour bearish market. And as soon as the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point we will be adding AUD CAD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of this impulse, correction, and impulse pattern to the downside, and completion of the W formation at least at the 0.32 of the Fibonacci taken on the weekly impulse. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering every single question that you have every day. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.